It's the events on the calendar that tend to give us the timing for a lot of the opportunities that we get. So whether it was volatility around OPEX or volatility around FOMC or any one of the high heat hot zones that are on the economic calendar, the things that we react to are the things that we know are coming. So obviously geopolitics and unforeseen events, there's no timing element because they're just upon us all of a sudden. However, tomorrow at 10 a.m., we have day one of two of Fed Chair Powell testifying in front of the House Financial Services Committee. What happens there? He's going to get grilled, right? He has a prepared statement that he's going to start reading, and then the Q&A starts. And that's where the volatility will also begin, although the statement could create a lot of volatility. Now, what are we going to use to track that? And then where does the opportunity lie? On the 26th of July, which is just over a month, it's 5 weeks from now, there is a 76.9% expectation that we're going to see the FOMC hike a quarter point. All right. We've accepted this. We know this. The equity markets reflect it. The bond markets reflect it. Gold reflects it. Dollar reflects it. Euro reflects it, right? If it's up at 70-some%, this is baked in. Where this gets interesting is, do July expectations for a rate hike fall, or do they just continue to increase past, say, 80%? And do we see any expectation for any more rate hikes as we go throughout the year? So presume, let's fast forward, if you will, to July 26, and we're at 5.25% to 5.5%. It is key then for the pause to be what's expected and therefore also communicated to Powell. In other words, through these Fed fund futures, the markets are telling him this is what we expect you to do. And believe me, they know. So the idea then that we could hang on to that 5.25% to 5.5%, not see a hike, and start to favor by the end of the year a possible cut going back to 5 to 5.25%, right? Put the hike in July, we might see the cut come as soon as December. So we're pushing out the timeline from the last hike to the pause to finally the cut, all right? And that's where we sit. This is what we know right now, and then tomorrow these columns are likely to shift depending on what it is that Powell says during the testimony. Wednesday is the more impactful of the 2 days. All right, so what does that mean? We have the potential for Powell pullbacks, but the question is where? In the Dow? No. What about relatedly in XLF? No. These are not trends, right? What about the S&P? S&P has been in an uptrend, so S&P is a possible Powell pullback opportunity to buy. This would be buy the dip, gang. I am not expecting a mean reversion, right? So we're getting a little bit more understanding of where that support level might be. I'm not expecting a mean reversion, which would be way down here, although who knows? That'd be a heck of a move. That'd be a heck of a panic. That probably would instigate a markets in turmoil special right on television. But the bottom line is I'm going to be looking for the daily price movement ranges. And then the far and away, the leading index, because the three high concentration weighted sectors within it are extremely strong, is I absolutely want to be buying a pullback in the NAS, probably starting at around 15,000. And this would then also lend itself well to just about every one of the high concentration weighted stocks in XLK. So this is Apple, right? This is Microsoft. This is NVIDIA, right? So I'm keeping those in mind as well. These are going to be overnight, short-term swings using the volatility of whatever it is that's going to come out of Powell's mouth. Look, Meta is another good contender for this. And notice that most of these names are names that are going to also factor into why the NASDAQ and the S&P might pull back and then rally up, right? But it's really very much a tech conversation. So S&P and Dow, I would probably leave that on the side because financials are not where they need to be yet in terms of a trend. And healthcare is still a mess, right? Partly because of UNH, but healthcare has been in a mess for a while, even before last week's UNH sell-off. If I want to navigate around financials and healthcare and the uncertainty around those, and I want to focus on buy the dip and the best examples of uptrends we have, it's really XLK, XLC, XLY, and semiconductors, SMH, and then, of course, the NASDAQ, whether that's NASDAQ Mini, NASDAQ Micro, or the NASDAQ QQQ ETF. That's where the focus is going to be. And the more that I can get those pullbacks to the daily price movement range zone, the more I have a volatility-based reason to be bullish. And that's the plan tomorrow. Ideally, we get the volatility when Powell's speaking in the first 2 hours before lunch. And then these, from a timing perspective, remember, gang, early is not, there's no such thing as an early trade. There's only timing. And to me, too early is actually wrong. So I think the timing is going to be, let's get the pullback in the morning, if that's what transpires, and then use the afternoon to see if we catch a bid, find support in these daily price movement ranges, and move higher. This is where my focus is, and this is the strategy that I want to move forward with. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.